Yeah, that's what markets are. And frankly, the market, again, you talk about the market in terms of the index positioning and also the positioning of the tone and the tonality of the market. Look, now the heavyweights are dragging the market. The reason why heavyweights are dragging the market is because globally there is a bit of a reversal. Flows now for the month, they are deep in the negative. And given the construct of where the macro is moving, whether it is crude, whether it is bond yields, the market in a sense have now caved below that range. And if Nifty caves has come below the range, what are we likely to expect? We could see more unwinding and more pressure in mid and small cap stocks, and the market now would look for leadership. So I think the next couple of days would be hard to call. But the trigger for the market should be in and around earnings season, should be in and around when you start getting sense about the festival season. I don't expect the market correction to be very deep. It would be a shallow correction for benchmark indices looking at the valuation and the construct of the economy. But in the mid and small cap stocks, I think there would be a lot more volatility rather than a linear move, what we've seen in, let's say, August or September.
Nikunj, in fact, market was expecting some amount of support from the IT stocks, and IT did between last series, 1.5 series, it did rally. But by the looks of it, last evening, the Accenture guidance and commentary, do you think that support also could be pulled off from the market?
JJ, my sense was that IT was never a driver. IT was always something which in a sense became like a safety ledge, and this market rotated back into IT. Now what is slightly disheartening is that Accenture guidance is coming and this comments from the CEO pointing to the fact that they still expect a weak exit and they are not very confident about the economic conditions. But what we heard from the Fed last week in terms of the US economic outlook, there is a vast difference in what the real economy in US is doing versus what is happening to the IT sector per se. Indian IT companies have always benefited because of the growth in US IT. So large part of the slowdown actually started largely because of what happened to Europe and what happened to US. But even the US economy has come back. Europe has stabilized. That has not really translated into some kind of a momentum for Accenture. Now Accenture, we all know, is a lead indicator but not the perfect indicator. So the lead indicator for IT is not looking great. Not that IT is like a line position, is not like the biggest overweight positioning in the market, but minus IT, minus Reliance, minus ITC, minus HDFC Bank, what will really take the markets higher? So that I think is a big question mark. And by the way, last couple of days, some brokerages did come out with some Braveheart reports. I mean, I would call them Braveheart reports because if you're coming out with a report on IT, you indeed need a Braveheart, and those Braveheart reports now have to be assessed realistically.
Oh, well, yes, and again, today tables have turned. There are downgrades which have come in again on IT today, so it's a very flip-flop situation. But I think the worst part was, of course, not only the weak guidance, but the bookings coming down by 10% year on year, because for the rest of the IT pack, at least we have seen that the deal flow has been quite strong. But for Accenture, that was the weak link. And talking about, of course, its base market, US, etc., there at least the GDP data has come in pretty much in line with expectation. That came in at 2.1% versus 2.2% expectation, and that's the reason yesterday we saw a decent amount of action when it comes to the US market. Dow was up a good 100 points. The S&P as well as Nasdaq managed to eke out some gains after many weeks of that consolidation that we had seen in the US markets as well. But back home, apart from IT, auto stocks are also going to be in focus because come tomorrow we'll get all those data as far as the September auto sales is concerned. But there at least we're expecting good news because the festive cheer is something that should start setting in. We heard from a lot of companies right from the fact when Maruti came on the channel and they said that growth in Onam was better than expected. Across the board we have almost seen 20% growth when it comes to Onam Day as well. The two-wheeler festive season has also started on a decent note. For CVs as well, there's an improvement in freight demand. So all the factors are looking good, Nikunj, right now in terms of the auto sales. But of course, it's also about valuations and also about the sustainability of this number.
See, let's understand what we will get in the next 2 days. When we say we will get auto dispatch numbers, these are wholesale numbers. Right. These are numbers which would be dispatched by the company. Now, these are not the sale numbers. These are not the retail numbers. Now, Maruti and other managements, what they've indicated to us is that they're reasonably confident that this time the festival season will be good. So right now, inventory levels, I think, are getting, so they are, in a sense, increasing the inventory levels. So this is the first indication that the management is confident that demand will come back, but it's only after the festival season, after Ganpati, Diwali, Dashera, we will know that the real demand has made a comeback or not. Within that, I think for me, for next couple of months, the dark horse is not Mahindra and Mahindra, but it is Maruti. Mahindra and Mahindra was the dark horse of 2022 when they had new launches, when XUV 500 hit out of the park, Thar, occupied center stage, and this entire move from sedan to SUV is something which really surprised us. Now, Maruti has two things. One, can their SUV business surprise us in terms of market share gain and customer recall? And B, the pressure what everybody is expecting in the sedan market, will that be minimal? So in terms of a move where you could expect both impact of news flow and also impact of what market positioning is, I think right up there is Maruti. Eicher is something which markets are well aware of, that the Harley Honda launch has not impacted them. Bajaj, it's a play on exports, frankly no relation whatsoever with what is happening to the domestic market, at least in the short term. And then trucks, I don't think CV is something you can connect it with festival season so much so. But in general, I think the trend there has been strong. So if you have to pull the real big one from the entire auto basket, I think it's going to be Maruti, where the news in a sense will be stock moving.
Mm-hmm. Nikunj, did you manage to catch some of the global cues which came in? The Q2 GDP came in line with estimates. Now they're talking about PCE data, the core consumption data, which Fed watches very closely, will be out today. So we'll react on it Monday morning. But there was mild softness in yields, but not a whole lot has changed in the last 2-3 days.
Sajay, what are markets telling you? Markets are telling you that, look, interest rates will remain high. And the assumption at the beginning of the year, which was that rates will peak out and they will start declining in the second half of the year as US perhaps could head towards a mild recession or a soft landing, that entire paradigm has changed. Now the new paradigm is that rates will move higher. Rates should stay higher. And we are looking at a very different kind of a setup for 2023 second half and beyond that. Now that changes the outlook. That changes the outlook for flows. That changes the outlook in the way how the near-term markets would move. Now we can, we can chop and church and slice and dice the US economic data in terms of the payroll data once in a while, or what is going to happen to the GDP data, or which way inflation is moving. Bottom line here is that Fed has reset the template and clearly indicated that higher rates are here. They may not move, but they are surely not done with the rate hiking cycle. Then the joker, I think, is still China, where you know what kind of data we are getting. So the world is not, so where the surprise has come in from, one, US, where the fall and decline has not been great, and second, China, where the recovery has just disappointed.